Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky. And we have Scott Redler on the line. He's the chief strategist at T3 Live and T3 Trading Group, joining us here this morning. Scott, how you doing?
I'm doing good. How you feeling this morning?
Good, good. We had some a heat wave here in Michigan, a couple days over 45 degrees, so I'm happy about that. We got a little static in the background there. Is there anything you can do on that?
Is this a little bit better?
Yeah, thank you. All right, big sell-off on Friday. Unemployment number, good number. Market reacted bad to it. Now, how many times have you seen this picture, Scott? You get the one-day sell-off, market down 270, 280, and the buyers come right back the next day. What's your take on is this a viable pullback?
I do think it's a viable pullback, but I'm not sure how quick I want to get in or if I get in too early. I think that's the problem that a lot of traders who trade for a living do, is that they get a little edgy because they want to be in and they feel like they have to be in, and if they get in too early and they can't handle it, all of a sudden, the trade that they wanted happens the day after from a little bit lower, and they potentially can't stay with it. We talk about time frames all the time, and if you remember last week before the jobs number, we were getting a little wishy-washy, a little choppy. I talk a lot about the 8-day and the 21-day as a momentum trend, as a trend that traders who try and be long, they try and be long when the momentum's above it. And then if you remember last Tuesday, that was your first close below the 8-day, which was right around 21.10. And then, a little bit more wishy-washy action, and then Friday, boom, you had the hot number, which took me by surprise. I'll be honest. I thought we could have a down day just because maybe the narrative changes a little bit with rates, because the Fed needs to have credibility, so they have to do something faster because, here we are in explosive, which people say, job growth, which I wouldn't say explosive, but decent. So anyway, we took out 2087, and we closed in a dead low. So I know for me, that stopped me out of some of my longs because, that's my process. If we go below the 8-day, we break below another level, who knows where we're going to go next. So I like to be somewhat more flexible and test levels. So like you said, here we go. We started a new week. What we do know is that Friday's low in the SPX was 2,067, which right away is about 50 handles off the highs. And usually 50 handles off the highs is what we've been getting for the last 2 years,
Right.
sometimes a little bit more. You have the 50-day right underneath the 2060 or 2062. So I think most traders like myself are probably hoping to get a down open, so we could maybe buy and down open for it to go from red to green and get a retracement. But when now you look at the futures are up 3-4 handles, the spiders are up 40 cents. For me, I'm like, okay, that takes away that trade. So now I have to figure out, if we do rally up, there's a 21-day, which is now closer to, what is the 21-day right now? It is, to say 2,084. Does the market get rejected there, or does it reclaim it? And if it gets rejected there, then do we take out Friday's low and create that RDR, type of reversal where we can get long reversal level? Because right now, 2067 is the only recent level we have to trade against, and there's some guys saying we're going to correct 8, 12, 15%, and there's some saying, we just had the correction last week into Friday.
And also, when you get the kind of selves like you did on Friday, when you start to go back up, I mean, there's not a lot of great resistance points to lean on. I mean, the way we cut through this 2070 handle, if you're throwing a short out at that area, you better be willing to take some heat, because I see a little intraday resistance at 2080, but a lot of times, they go cut down to these areas and go right back up. Well, I want to talk to you first. We'll get Apple out of the way here. Looked like it was going to break down, gets added to the Dow. Wild day in it. Do you play these events, or I know you've been a little hands off on? You've been waiting for a pullback to buy. Are you just gonna sit on hands during this Apple event, or are you gonna get down and dirty?
Well, I'll be at my desk. Usually I take a spin class at lunchtime, but no spin class for me today. With the 1 o'clock event and with, to spot the markets in, because, it's been such a leader, you want to see how they treat this event. Do they sell the event, which they try and do at most Apple events, or can they not sell the event, which then would maybe give us a decent entry, considering you don't get too much of a pullback in Apple, over the course of the year. So, what I've been doing is I'm writing down 125.76. That was last week's low in Apple. If we hold above that and get through the event and have a green day, then my next level to potentially buy would be above and close above 129.40, which is that resistance area that it hasn't been able to break, that mini downtrend since the high, last 2 weeks ago. So it's going to be interesting. Sometimes the event days are real noisy, almost like a Fed day where you have back and forth, and you just blind yourself up trade volume, and then the house wins and you don't. But I think that getting through today and tomorrow is going to be important. I think something that there's some reading about that people are looking for. Obviously, battery life is real important. If you can't have that watch on all day long without recharging, I think that'll be a negative. I think people looking at pricing, they want to make sure that the margins are pretty good, and I think 3 different models are coming out, and then also launch. They said April. If you hear May, I think that's a negative because people want obviously the revenues and they want it available quicker. So going to listen for those 3 keywords, and then we'll have both those levels, and then I'm going to try not to overtrade it because again, just like the false moves that happen on any kind of event in the actual market, it happens a lot in Apple as well.
Are you buying the watch?
I'm definitely buying the watch. I bought every
Okay.
product that Apple has. I'm sitting here
There
on
we
an
go.
iPhone
We got
6
one.
I love their product.
Okay. All right.
um,
Good. Let's move on. And this is a 2-part question here, and I never really asked you how much attention you pay to ratings in the street. Goldman Sachs downgrades a BlackBerry to a sell, lowers the price target to $9 from $10, trading down to pre-market. You put any faith in Wall Street ratings, and what do you think of BlackBerry?
Well, sometimes you do. It depends on how it acts, and it depends on when the rating happens. If someone gives a strong buy on a stock that just had a 100% move, and sometimes that's the last time it goes up. Same way if someone does a sell near a bottom, usually that capitulates it. But something like BlackBerry, it's interesting because 2 weeks ago we talked about it when it looked technically good when it broke above 1040. When it broke above 1040 on, what was that day? That was February 25th. I bought the calls going out 2 weeks, and I also bought the stock. So then you had that move, and if you look at the move that it had up into, what was that, March 3rd, that's a red dog reversal top and tail, right? It traded above 1118, hit 1145, closed red below it. So right there, that was when I took off the stock, and I held, a third of my options that wound up, not doing as well because it came in on Friday. So here, it looked as if, it could hold in there, right? It could hold the top end of this range. Maybe next time above 11 it goes. So now all of a sudden with this downgrade, it brings it back into the range, and it's going to need more time. Whenever you're looking to play a breakout, unfortunately, if you try and game it and go a little bit too early on it, something like this could happen. I don't know why they're downgrading it, what the story is. Maybe they're short and something's happening. They tend to sometimes have a contrarian move to it, but if you're not a BlackBerry fan, which I'm not really a BlackBerry fan, I just like the chart that time before that little failure, I would reduce and then wait. And again, if you have a stock that you don't love, instead of sitting in the stock, you go out buy some calls, so at least risk is your premium paid versus sitting in something that has been a laggard for multiple years regardless.
Moving on to the next issue here, and this is just not a clean chart at all. Facebook, you had it make a run at the all-time high 82.17. You did that on December 23rd. You sniff 82 on Thursday, 81.99, and then you get a little bit of a shellacking in the market. Closes near the lows of the session here. Kind of in the middle of no man's land. Are you more apt to let it maybe drift down here under 79? I see a low at 78.85 and double bottom, or actually 3 lows in a row, right to 78.60 level. What's your take on Facebook?
Facebook I'm very active in. If you look a little further back, you see when it had that clean breakout above 77. That's what got me, back hyper-focused on it. And then, I bought the stock, and then in that flag, I bought stock and options, and then last week, I'm like, what, if this stock's going to break out and close above 81 or 82, it's going to happen pretty quick. So I bought the March 20th 81s, and I also had the stock because I liked it technically. And then when it kissed that 82, like you said, and fell there and closed on the lows, that's when I reduced. And then I had some on Friday, and then I didn't like the market action, so I sold the equity because I can get back in, and I held my options just to have. So now I'm coming in flat Facebook, and I'm going to watch it very close the next day or two. if the market holds in there and it turns back up and holds, it's still held the 8-day. It's still, in the upper quadrant of that channel. If you go with the channel from 72 to 8160, it's still, it's still up there. So I would say as long as it stays above that, 7850 area for the next session or so and turns higher, I think it's, still something you should hyper-focus on. And if today we grind up and if just say Friday's low was the low in the market, I think next time it gets above that 8150 or 82, maybe it has finally a successful breakout. So at this point, it's acting resilient, but, again, things change fast. So I said, I'm going to get out of the stock, stay with the options just in case. And today and tomorrow, I'll watch it because, if it trades below, like you said, that price point Friday's low of 79.83, get some people out, turns back above, closes above it, then all of a sudden you still have a nice little trend, and then next time again above 82, if the market is acting better, you can have a much more successful breakout.
Kind of sticking with the analyst theme here, J.P. Morgan, I believe, comes out and says Twitter is a compelling buy at risk-reward ratios here. I don't know about this one. Big resistance up at 50, holding the gap from the earnings. You agree with J.P. Morgan on this one? Compelling buy-side risk-reward ratio in Twitter.
I actually wrote about that in December, saying that it would be my focus for 2015, and went long options into the earnings, and it was a really nice move from 38 to almost 50, and now it's been sort of choppy and like you said, holding the earnings gap, which I think is showing some commitment, but it's been a little tired. Again, big move, 38 to 50? It has to digest that, so I'm happy that JP Morgan came out on it. They typically don't do things, I feel like, to take the other side of the trade, not saying Goldman does that, but, I also was in Twitter last week, and then on that reversal candle around 50, I got out of the stock, and I'm like, you know what, let me wait and see. So if today Twitter, it's up 50 cents, if it holds that gap and shows relative strength, I'll probably get back in the stock. Then again, if the market doesn't, hold it, if it holds in there and Friday's low was pretty much the low, next time it tries to get above 50, maybe it has a breakout move. It's just that the momentum in buying high and selling higher has been so hard to do in the past multiple months besides the select few stocks. So it's really been about pricing. And, right around here, at least up 50 cents, if it holds it, you're not paying 50 to re-enter. And if it holds the gap, it shows a little bit more power. And then maybe that'll be, be helpful. And if all of a sudden, but, you look for clues in the market today, because if Twitter can hold the gap based on a JP Morgan upgrade, that shows you that, it's not that strong. If just say Facebook can hold 79.83 and gets back into the 78s, and that they're not buying anything higher, and that maybe we have more of this corrective phase in the markets because leaders can't even show relative strength.
Taking a look here we were talking about Gilead a little bit, and trying to hold some support here. What do you think about this? I kind of like these trades where you have a bunch of lows in the same area, closes heavy on it here. Tight area, a little bit of consolidation. What's your take on Gilead?
I bought calls last week thinking that, if the market holds in there, the buyers were strong. I'm looking at that, downtrend, or not even downtrend, just resistance line that's been holding it around 104, 105. And there are two ways I have people try and gauge my action. If I'm in the stock, that means I trust it. I'm not worried about headline risk, this and that, and I like the way it trades. If I'm in the options and not the stock, that means, it's very choppy, doesn't trade well. Something could ignite it, but it might not go yet. It hasn't had a confirmed breakout. So what I did is I bought the March 20s also. Said I'm going to buy the 104s. So if it does break out and close above it, I'm in it. I'm watching it, and I could add to it. And if it doesn't, my risk is premium paid, and it's not, taking attention away from my day because these biotechs are hard at times. So at this point, it's still acting well compared to some things in the market. But again, just like I said, it's been hard to find momentum. It hasn't broken above that area, and it's not where you could buy high and sell it higher. So I'm going to stay with those calls, and they go worthless. If it happens to turn up and the market hangs in there and the buyers continue to show leadership and it closes above 105 on heavy volume, then I'll go after it. But I typically trade options with bios because of all the risks that can happen with the results and testing and at the FDA. But if I'm going to be along the sector with the equity, I usually go with the IBB, so at least it's a little smoother just in case one name it has a disaster. At least if you're in the IBB, it'll be down, but it won't be a disaster.
Great point by Scott here, and I hope our listeners are paying attention, especially with these biotech stocks. You buy the options, you spend a couple $1,000s on options, you know your downside when you're trading the stock. They come out with any kind of news, negative news, you can lose a lot, very volatile. But it's a good way to gauge your, enthusiasm for the stock, and traders should pay attention to that. Before we let you go, we got some news out of our Detroit, Michigan company, General Motors, stock buyback, raising the dividend here. Coming in, not only was this a resistance level earlier in the month, this is some long time resistance here at 38. Is today the day GM finally breaks out above 38 and heads up towards that $40 level?
It'll have, in the game forward, it probably has some shorts trapped in there too. If you look at the candle on Friday, it's a pretty ugly candle. And after a big move, I'm sure some guy said, "Oh, look at this engulfing candle. I'm going to get short." And if you are that trader shorted, which I'm not, I'm just looking at it. You didn't do the wrong trade. That looks like the right setup where, okay, boom, stock went from 33, stalled at resistance, wide range bar down. I'm going short. You didn't know all this news was going to come out. So if you happen to be short, what you just mentioned is you have one, two. This is the third time it's up here near this 37.50 to 38. If you get a break above and close above it, get away from that trade and cover, because if it does have a sustained move, you don't need to be just scaling up short because you got trapped in a trade on Friday. And if it happens to gap up and hold it and go, then again that might give you some clues in the market that they're buying some strength, they're letting some things go, and that could mean that this pullback in the market that we saw last week remains shallow, and you have to be quicker on your toes to get back in versus wait. But if it can't hold this, then I don't know what it's going to hold. That just means that the market's just that lethargic. So I think GM's worth watching today because of the catalyst here and the level there, and just trust those levels and and go with it that way.
Another great point here. You're looking at it not only from the perspective of, this is resistance, long-term resistance, but you also look at it from the perspective of the people that did sell on Friday into that. Stock closed on its lows, momentum in the market. So that's another way. Sometimes that keeps me out of trouble as well. We've been on the line with Scott Redler. He's chief strategist at T3 Live and T3 Trading Group. He joins us every Monday morning at 9 o'clock to give us his setups for the day and for the week. Scott, great input as always. Thank you very much. Have a great trading day. We'll talk to you next week.
All right. Thanks for having me. Be safe.